Good afternoon and welcome to our Maximizing Your Membership webinar on staying ahead of the shifts in Canada-US trade. I'm just going to sort of get things started. People are still kind of coming into the webinar, so we'll just give it another few seconds until we have folks in. For those of you that may not know me, my name is Corinne Pullman. I am the Executive Vice President for Advocacy for the CFIB. I am coming from Ottawa today, and I'd love for you to share in the chat where it is you're coming from today. That would be super helpful, and to say hello. The chat is on the bottom. There we go. We got folks from British Columbia, from Windsor, Arnprior, Calgary, Ottawa, Winnipeg, Toronto, Edmonton. I love this part of it. I just love to see where everybody's coming from right across. Vulcan I saw come in through there, Moncton, St. Paul's, Alberta, Waterloo, Jasper, Ontario, lovely, London, coming from all over. Grand Prairie I saw, good shout outs, PEI. So folks are right across the country, and I have no doubt this is an issue that many of you are a little worried about. We are too. But we wanted to take an opportunity today, despite the changing circumstances it seems from day to day, to sort of try to give you a bit of the lay of the land. I will say at the very beginning, we may not have all the answers, but we'll try to share with you as much as we can. And we have with us today someone I think that can help us answer some of your questions. So I'll get to that in just a second. First, a bit of housekeeping. I think you've all found the chat, which is great. It's on the bottom. But also, if you want to ask a question or you want to get a copy of the want to get a copy of the presentation we're going to share today, that will be in the chat. It's probably at the very bottom of the chat right now, given you've all added to it. So I might ask Vahid if you could post it a second time in the chat so that you can grab it when you need it. Secondly, if you have a question, I would ask that you use the Q&A button. It's easier for us to track in the Q&A than it is in the chat. The chat can get a little lost, the questions. So if you put it into the Q&A, it's easier for us to track the questions. So when we get to the Q&A type of period, we can make sure that we try to get to as many of them as we possibly can. So from there, let's move to the next slide. So as I said, I'm Corinne Pullman, Executive VP here at the CFIB. Joining me today are my colleague, Michelle Auger. She's our Senior Policy Analyst. Say hello, Michelle.
Hi, everyone. Happy Tuesday. Happy to be here and hear all about what you have to say on the subject.
Thank you. Michelle's been very much involved in trying to battle these ongoing changes every single day. Also joining us is our special guest, which we are very happy to be able to join us, is Joy Knott. Joy, please say hello.
Hi, everyone. Looking forward to this session.
So Joy is a partner in trade and customs at KPMG Canada, and so she's a pretty good expert on everything to do with trade. She's also the former head of Importer Exporters Canada, which is a trade association that helps out importers and exporters. So she comes with a lot of experience and is going to help us answer many of your questions today. So thank you, Joy, for coming at the last minute and helping us out, because I think there's some good questions here that I think you'll be very helpful in answering. But before we get to Joy, we wanted to do just a bit of an oversight of where we're at. So if we move to the next slide, we are going to talk a little bit about our current situation and the work we're doing at CFIB to try to help you navigate this sort of uncertain time. We also want to share with you, we've been doing some surveying. We do have some fresh survey numbers that Michelle's going to share with you what you're telling us, a little bit of a glimpse into some of the survey data. And then we're going to move into Joy, and she's got a few tips for you on how you can potentially navigate some of this and what this actually all means for your business. And then we'll jump into Q&A. Okay, so let's move to the next slide. Of course, we're all here because trade has become front and center. We already knew once President Trump was elected last November that this was high on his agenda, was to potentially use tariffs as a tool to either create opportunities for American businesses, that's so he thinks, or to discipline other countries and how they're operating, and as many people speculate, as a means to raise revenue to sort of pay for other things within the United States. These things, of course, have been escalating. By early February, there was a very close call where he was going to impose 25% tariffs on everything coming from Canada and 10% on energy. At the very last minute, this was averted, and it wasn't just Canada, it was also Mexico. And that was averted at the very last minute for 30 days until March 4th. However, as we all know, or you haven't heard, as of last night, there has been new tariffs applied to all countries around the world on steel and aluminum. So 25% tariffs on both steel and aluminum, starting also in March, early March. Those tariffs will be applied on all countries around the world, including Canada. So it is a bit of a fluid situation that seems to be changing every day. Canada did respond, and we'll get to that in a minute, on the first set of tariffs that were postponed. Canada has yet to respond on the aluminum and steel tariffs that were introduced just last night. Given that they're not actually going to be put into place until March, it looks like Canada is going to be working with other countries on what a sort of a global response could be to that. So we're still waiting to hear what that might look like. So that's kind of the situation on the trade side. We move to the next slide. This is all under a political landscape in Canada that is feeling a little unstable as well. We don't really have great leadership at the moment. As we all know, Prime Minister Trudeau said he will resign in early January after a lot of pressure following the resignation of the finance minister in December. That has spawned a leadership race on the Liberal side. And we have a new potential Liberal leader that will become the Prime Minister automatically on March 9th. Right now, there are about, I think, 5 individuals left in the race, 2 of which seem to become the front runners. That is Mark Carney and Chrystia Freeland. So we'll have to wait and see which of those ones become potentially the next Prime Minister. At the same time, Parliament was prorogued in order for this leadership race to happen. So while government remains operational, there is no legislative work happening in terms of creating laws, moving laws forward, and making adjustments on that front. So it's a bit of a weird time at the federal government level. So we have seen many provinces kind of step into that void a little bit. We have seen, premiers from various provinces make announcements. The premiers are going down to Washington tomorrow to do as a group, to do as much of a blitz in Washington on their own front. So it's been an interesting time watching the political landscape in Canada and how the reactions are going to be. Of course, there is an election this year, just at the federal level. We just don't know when. There is currently an election in Ontario, for those of you that are, of course, in Ontario. But there will also be a federal election this year. It's just whether it'll be right after a new Liberal leader is elected and go straight to an election, whether it'll be after prorogation is ended and the opposition parties decide to take down the government, or the latest it could be is October if they go the full length of their mandate. So again, a lot of instability, a lot of unknowns. Okay, so we move from those two very unstable things that are happening at the moment to the next slide. This is the way Canada initially reacted to the first set of tariffs that were announced early February, but then were not implemented right away. That is going to have an impact, of course, on the importing side versus the American tariffs would have an impact on the exporting side. So this gives you a bit of a rundown of what was being planned. Of course, all of this is now on hold until later in March 4th at the earliest. Now, things can change every day. Given the tariffs that were announced just yesterday with steel and aluminum, Canada may decide to introduce new retaliatory tariffs as well. It's unclear, but this was what they had planned to do back in early February when the first set of tariffs were announced. Okay, moving to the next slide. Just a bit about our work. So we have been super active. We've been trying to figure out how we can be best positioned to sort of help our members right across the country. So we're doing a number of different things on a number of different fronts. We, of course, continuing our work of advocacy. We are in contact with political leaders of all political stripes at all levels of government, including where we can, our American associations that are our counterparts in Washington, D.C. and other spots within the United States, to sort of understand how we can work together, how we can convince them to convince their administration to potentially back off. We're also focused on reducing the costs that you face as a business on a day-to-day basis. We also want to think about ways that red tape could be better managed going forward, and of course, reducing interprovincial trade barriers. Those are the things that we really want governments to also focus on, in addition to dealing with the tariffs as per se. We also want to make sure that should tariffs come back, we want to make sure that any business support programs that come out are actually going to be helpful to small businesses just as much as large businesses, because we worry a little bit that some of these programs that may come out to help businesses directly affected will not necessarily be as accessible to smaller companies. So at this point in time, that is our focus. We've done a couple surveys already. We'll show you some of that data in a second. We have a web page that we've set up where we're constantly updating on an almost daily basis these days on what's happening with tariffs and the latest news and other information you may find useful. You can also share there what it is that you are experiencing as a result of this. So that would all be helpful. You can see it there. It's www.cfib.ca/tariffs. We are also about to launch additional posters and signage to sort of encourage Canadians to buy local, not just Canadian, but also buying locally. As I think that's an important message that we have always been out there pushing through our Small Business Everyday campaigns and our Shop Small Biz campaigns. But we will continue to do so going forward in a bigger way. So you're going to see more of that coming from us in the near future, that potentially can show that you're a Canadian company and that you are a local company, and that this is a place that consumers who are being conscious about where they shop can feel good about shopping at your business. And finally, we have our business advisors. They are there to help our members. They have good information. They have key government contacts that can help you deal with tariff-related questions or any other question for that matter. And it's just a reminder with our phone number there that you can give them a call and they'll certainly try and help. Okay, from here, I want to turn it over now to my colleague. If we go to the next slide. And this is Michelle. Michelle, I'm going to turn it over to you to share a little bit of the feedback we've been hearing from our members.
Great, thanks, Corinne. Yeah, just want to take a few minutes to share some of the data that we've collected through surveys. We do understand that the US is Canada's largest trading partner, even for SMEs, right? We understand the importance of reiterating that message in our communications to government. In fact, just from the international trade survey that we conducted early this last year in 2024, we know that US is the top exporting country and top importing country. So we're making that point with government that there's such a big importance in understanding that relationship, even from the small business perspective. Moving on to the next slide, as Corinne mentioned, we do have a live survey right now available to all members and non-members. The link should have been shared via email, but I'll also copy paste the links on here so you guys in the chat have access to that survey. For CFIB members, I believe you just have to go into your portal and you can access the survey directly there. But the intent is really to get as much feedback as we can from small business community to share your points of views with government to make sure that if tariffs do come to fruition, we can share your viewpoints and advocate on your behalf. So right now, as this is brand new preliminary data, the data we're sharing with you today hasn't been publicly shared. But right now, what we're hearing is that most of you are not ready for these tariffs. And so that's going to be a key point of some of our communication in the coming weeks. On the next slide, again, these are brand new data points that we've collected from that same survey. And so the priorities for government right now as they stand is the tax reduction. So making it fiscally more viable for your business to operate is really the top priority. And right there, you'll see encourage business to buy local right underneath. And so on that note, I did circulate, we have some posters that were developed. So in the chat, you can go develop that poster that's been developed by CFIB. And so you could put that in your businesses so that people understand that, you are a Canadian business. While you may import and export, there are a lot of Canadian local businesses that people should be shopping from. And then further down the list, as we just keep going, some of the other top priorities is just ensuring that governments are aware that they should be buying from Canadian businesses and to expand trade deals in other countries. So what services are available? And we'll go through some of that very soon. And lastly, there's a big movement right now there on internal trade barriers. And so we're really jumping on that one and trying to work with the provinces and the federal government across country to reduce the trade barriers that are currently existing in Canada. So brand new data and
Yeah.
things that you'll be hearing more from us that we'll be sharing with the government in the coming weeks.
So Michelle, before we move on to Joy, there's a couple quick questions that I think are worth answering right now.
Perfect.
One is Margie is asking, or Margie, I'm sorry if it's Margie or Margie. My business is local. We hire local employees, but carry imported goods. No producer in Canada. The Buy Canadian campaign scares me because my goods are not and can't be Canadian. So I just want to assure Margie that we are fully aware of this, and this has been a really important point for us to make. And many of the media calls I've been doing on this topic, I have said, look, there are things that are going to be American on many small businesses' shelves. We don't want you to think only Canadian. We just want you to think Canadian businesses and small businesses and local businesses, because it's going to be difficult for everything to be taken off the shelves from American companies, and we need to just support our small businesses and our local businesses. So that's going to be part of the campaigns that we launch. So I think that's important. The other thing, Michelle, that I want you to answer is a question from Angela about, can you elaborate on the elimination of barriers to interprovincial trade? What does that mean?
Yeah, so some of the things that are gaining a lot of momentum right now are things like mutual recognition. So we're seeing, hearing from businesses anecdotal stories of, you'll have a farmer in BC who can't sell chickens in Alberta because his chickens are only provincially regulated. But why are those chickens good for BC, the population of BC, but not good enough for Albertans? So it's those kind of funny things that exist in Canada. And I think a lot of people are not necessarily totally aware that they exist, but to get those different licensing to sell across countries can be quite costly to businesses. So we're trying to raise all those pain points to the federal government and the provinces to eliminate those barriers and just make it easier to sell those chickens across the country, right? So that's just one example.
Yeah.
But there's several other examples, like even health and safety regulations across the country are very much divergent. And so those are areas we're trying to make the government make it easier for these businesses to operate across jurisdictions.
And the way we're suggesting they do that is that each province mutually recognizes other provinces' rules. It's mostly the rules that are different. And it's not that they're any less safe in one jurisdiction or another. They're just different parameters, which causes extra paperwork for business owners. So just mutually recognizing each other's rules has been our big messages to all the provincial governments, so they don't have to try to come to one rule that's the same, that they all can have different rules, but they recognize that their rules are equivalent to the ones in their own province. So that is the strategy. All right. Let's turn it over to Joy now. I'll leave it to you, Michelle, to introduce Joy.
Yeah, and so now we'll just jump into the next part of the webinar where we have Joy Knott for KPMG, and she's really going to run through some of the practical elements of the U.S. tariffs and tariffs in general. So thank you, Joy.
Thank you, Michelle, and thank you, Corinne. And thank you to all of you for having me here today. I'm looking forward to this session. So hopefully, we encourage questions. So I'm looking forward to the end when there'll be a Q&A session. But amongst questions, I'm asked at times some questions, some really fundamental questions that I think are important and not assume that people know the answers to. So, for example, do tariffs apply to services? And the answer to that is no, they don't. Tariffs only apply to physical commodities that cross international boundaries. That's tariffs. Another word for tariffs is duty. Another question that I'm often asked, what's the difference between a tariff and a duty? Essentially, they're exactly the same thing. It's two words for the same thing. Technically speaking, a tariff is a tax, a duty is what you pay. But the way that the English language is in North America, we swap those words out routinely and they mean the same thing. The third question that I think that I'm asked a lot, there's one more. Do tariffs apply to exports? The tariffs that we've been talking about and that we've been hearing about in the news and that sort of thing do not apply to exports. Now, is there a possibility of tariffs on exports someday? Yeah, maybe, but that's nothing about what you've been hearing in the media recently. Everything you've been hearing in the media recently are tariffs on the imports into whatever country. So for example, when the Trump administration applies tariffs to something, those tariffs apply to imports into the United States. If the Canadian government retaliates with tariffs, those tariffs will apply for goods coming into Canada. The next question that I'm asked a lot is, how do you actually calculate a tariff? Because for a lot of people, they think it's just my sales, for example, to the United States times 25% if you're talking northbound, or if you're an importer and you're bringing goods into Canada, again, it's your purchases times whatever the duty rate is of any potential retaliatory tariffs or tariffs that are applied on your imports in normal times. And it's a little bit more nuanced than that. In order to be able to calculate your tariff, there's a couple of data points that you need, and there are different ways that you can get this information. First of all, there are websites that can help you with some of this stuff. Reach out to CFIB. I'm sure that they can help point you in the right direction to get you to those websites for CBSA. And of course, if those of you who use the services of a customs broker, your customs broker can also help you with a lot of these things. So the first thing is a tariff classification number. And what a tariff classification number is, it's an international language made up of numbers where customs authorities around the world describe goods to each other. So commodities, there's 99 chapters. It's a great big super thick book. Don't print it. If anybody ever sends you the link, don't print it. It's literally thousands of pages long. And what that is, think of it sort of like a phone book where there's a certain logic. The chapters are broken out in a logical sequence, and you would start off by looking up the generally what your goods are, look at the chapter, and then it breaks down from there in a numerical sequence that finally gets you to the exact 10-digit number for your product. You take your tariff classification, you combine that with your country of origin, because different countries, Canada has different free trade agreements with different countries. So it's important to know where the goods are that you're trying to calculate duty for them. Where are they from? Are they from a country with a free trade agreement or not? So your tariff classification plus your country of origin gets you to your normal duty rate. Now, what we've been hearing a lot of, so that's the first line. That's your most basic arithmetic equation for how to calculate a tariff. Now, what we've been hearing about on the news, 25% tariffs, potential retaliatory tariffs of 25%. How do I calculate those? Let's look at the second line here, the second line of bubbles. You take your normal duty rate, which we just talked about, and you would add 25% or whatever percentage it is of the day, because it seems that these things are changing daily, it seems. Take whatever that rate is that you're talking about, that would be over and above any normal duties. So if your normal duties are 5%, in this case, it would be 25 plus 5 for a total duty rate of 30%. You would then take whatever your total rate is. So let's assume the normal duty rate is 0, because that's what a lot of us are used to. If a new tariff was put in place of 25% on everything, or steel and aluminum goods, like we've heard about in the past day, you would take that rate and you would multiply it by the customs value. Now, what's the customs value? If you're buying and selling goods between two unrelated parties, it's whatever the price was that you bought goods for. If you're dealing with a company two companies that are related on both sides of the border, so if you have a US subsidiary or if you are a subsidiary to a US company, you would be talking about most likely the transfer price, which is a price that's calculated for income tax purposes. I won't say more than that. Be happy to answer questions on it. So you take your rate times, we'll say, because I'm sure most of you are buying and selling to unrelated parties, you would take whatever that price is that you bought or sold goods for times the 25% plus your normal duty that we talked about. And that's how you would know how much duty is owing. So I know it seems like it's a little bit convoluted. There are places that you can get help out there. And like I said, CFIB can help point you in the right direction to CBSA websites and stuff. Corinne.
So one quick question I just wanted to get as we're on this slide from Jessica is, would customs value refer to the actual cost or the retail value?
Retail value. So it's not the cost. There has to be a profit margin. It's never the cost of the goods. It's always the cost plus a profit margin. So retail value.
Great, thank you.
Okay, are there any other questions on this slide before we move on?
There are going to be a few more questions, but I think that are directly related to this. We can do them in the Q&A.
Okay, so we'll move on to the next slide then, and we promise we'll come back to your questions. So other questions that I've been asked since all of this, I'll call it tariff unrest, has started, is what can we proactively do to prepare ourselves for so much uncertainty when it comes to tariffs? What kinds of things can we be doing as a company to be as prepared as we possibly can be? This is a list of things that we're saying to our clients that they really need to stop and consider. Things that maybe in a normal working day you don't give thought to. in this time in history, it might be worth your while to sit down and have calm, reflective moments, doing things, for example, like looking at the contracts that you have with your suppliers and contracts that you have with your customers. When was the last time you actually read those contracts and the details of those contracts relative to questions like, if there was a tariff, which party is going to pay the tariff? Could you pass the cost of the tariff on to your customers, or will your suppliers pass the cost of a tariff on to you? What do the contracts say about that sort of thing? And if you, after reviewing your contracts, if you don't like what you're seeing, consider renegotiating. I think everybody is aware that the business environment is very much changed, and I think you'd find a lot of companies willing to sit down and potentially look at renegotiating contracts that maybe don't fit on either side of the table anymore. The other thing that we're encouraging companies to do is to take a look and ship goods to either the United States or bring them into Canada as fast as you can before the tariffs are actually applied. I'm on the third bullet point right now. Given the fact that we don't actually know, I mean, we have dates. We know that March 4th, there's tariffs that are supposed to apply, March 12th for the steel and aluminum, but these dates seem to be on sand and they seem to be moving a lot of the time. We encourage companies as much as possible that if you can move inventory across international borders before there's a tariff in place, to do that as much as conceivably possible. Looking at the second bullet point now for a second, if you're going to be looking at moving goods, more goods quickly across the border than you might otherwise do to try and avoid tariffs, take a look at who's buying, who's selling, who's responsible to be the importer of record. That's the company that sticks their hand up at the border and says, hi, I'm the company that will take full responsibilities for duties and taxes. In those contracts that you reviewed, who's responsible to take that on that role as importer of record? And if it's you, make sure that you fully understand what that means. Talk to your customs broker, talk to your accountant or a lawyer if you feel that you need to understand more what the risks and responsibilities are. The fourth point is to say, okay, if Canada and the United States get into a trade war, the world is a big place. There's lots of other countries that you can be acquiring goods from and a lot of other countries that you can be selling goods to. And I'll speak a little bit more to that on a future slide. If you're a company that's got that has locations on both sides of the border and you're talking related party to related party transactions, talk to an income tax advisor about those transactions, specifically about transfer pricing. There's all kinds of ways to potentially lower that intercompany price. The lower the price, the lower the tariffs that you would pay. You can't necessarily eliminate them, but you can certainly look at minimizing them. The same thing goes for the next bullet point about unbundling landed cost. What does that mean? That ultimately means what's baked into the price of your goods. I'll give you one example of something that you can deduct out and you don't have to pay tariffs on. If totally baked into the price of your goods, whether you're selling them or buying them, if baked into that price, you have the price of transportation, the UPS charges, for example, or the FedEx charges, or the Canada Post charges, or whatever they are, if those are melted into the price, you don't have to pay duties and taxes on transportation. So look at pulling that amount out and having two lines on your invoice, one for your goods and another one for your transportation if you wish to charge your customer transportation, because customs brokers know if they see transportation on an invoice, they don't charge duties and taxes on it because that's the law. You don't pay duties and taxes on transportation. So that's one example of unbundling your goods. Again, customs broker, accountant, lawyer can help you with those kinds of things if you have any questions. The final one is reviewing import sales structures. All of that is to say, when there's often complex supply chains where there's multiple vendors and there's multiple purchasers and things are, if it's more than just one buy sell, now's the time to stand back and do everything I just talked about. Look at contracts, consider who's responsible for doing what. I'll leave it at that, and I'm happy to answer any questions on that. So now if we can move to the next slide. I talked earlier about the fact that the world is a big place and there's lots of places to buy things from if you're looking at pivoting away from the United States, and there's a lot of places to sell your goods to, again, if you're looking for new markets aside from the US. This map shows that Canada has 15 free trade agreements covering 51 countries. And, as a trade nerd, I'm proud to say, as Canadians, Canada is the only country in the world that has free trade agreements with all G7 countries. So these free trade agreements have been sitting on the shelf, some of them for many years. And I'll be honest, I've been doing international trade for 40 years. A lot of companies that I speak to, they only deal with the United States and they don't really think about the rest of the world. And they don't realize that Canada has these negotiated free trade agreements ready and waiting for them to use. I think now, given everything that's happening, now's a really good time to look around the world and realize that you have duty-free access to more markets than just the United States, whether you're buying from the United States or selling to the United States. The world is a big place. Canada has lots of free trade agreements.
And I think just to continue a conversation that you and I were having earlier, most free trade agreements are structured the same way. So if you're used to doing a certain way with the United States in the free trade agreement we've had with them, it's likely not going to be too much different if you can find a supplier in another country that has the same thing, if that we have a free trade agreement with. There may be a few nuances here and there, but
You're exactly right. The framework of all of these free trade agreements is pretty much the same. So like Corinne said, if you understand how the CUSMA, or as the Americans call it, the USMCA, if you're familiar sort of with how that works, a lot of these other agreements you're going to recognize right away. They could have, like Corinne said, they could have small differences. Maybe the rule for your product in the United States says 50%, and in the rule for the free trade agreement with the European Union, it says 55%. But the structure of the rule will be the same. So you just need to understand those few nuances between the various free trade agreements. But the free trade agreements are there to give Canadians access to those markets. That's the whole reason behind those free trade agreements. So yes, Corinne, you're right.
okay, I think we're going to go into a bit of a Q&A. We do have a number of questions that I'm hoping that we can get through in the next, we do have quite a bit of time, which is great. So feel free to continue to ask a few questions. We'll try to get to as many as we can. I'll just do a quick, Hemkesh, if you don't mind taking down, we can sort of, so people can see both of us talking at the same time, and as well as with. Okay, so what we'd like to do here is ask a couple questions. I'm going to go back a little bit. I don't know if we have the answer to this question yet, so both you, Michelle, and for Joy, are the tariffs that just were introduced yesterday, this is Pedro's question, are they for the raw material steel or for products made of steel? Do we know at this point?
What I do know, they're definitely for what you're referring to as like raw material steel, meaning coils and plates and sheets. And I'm not really a steel person, but like big hunks of steel that it's definitely covering that. And as far as I know, it's for products made of steel. I'm unclear if it's for products made of aluminum.
I think it is, because I think beer cans is included. I remember from the last time we had a lot of issues with that in the United States. So,
and actually, you're raising a good point, because what this is a renewal of the 2018-2019 action. So if you actually read the executive order that came down from the White House, it actually makes reference back to 2018-2019, the first time Canada had a dispute with the United States about steel and aluminum. It's that exact issue. It's back again, and now they've changed the rates from 25 and 10 to 25 across the board.
Yeah. The executive order does state all products related to steel and aluminum. And so while there's not really a clear definition right in there, it is all. So we can maybe assume at this point, but we can certainly keep that on our list for things to add to our website.
Yes. Scott's asking, what about used products? Are used products usually part of these types of duties and tariffs?
Interesting question.
Yeah.
Used goods are valued differently for customs purposes, but they're classified the same way. So that classification number that I was talking about, that would be the same whether the product was new or used. And it's the tariff classification that the duty points to. So if you're bringing goods in that belong to a tariff classification that attract the tariffs, then yes, used goods would attract the same level of tariffs.
Yeah.
Good question.
It is. We have a couple questions around the country of origin, right? So So Crystal is asking, does country of origin equal country of manufacture or country selling the product, i.e. products manufactured in Japan but exported out of the US? And then Margie is also asking similar questions. I've read that retaliatory duty rates only apply to goods with USA as a country of origin. So if I'm importing from the US goods with a non-US country of origin, I still pay a normal duty rate. So can you maybe explain a bit more on the country of origin? Yeah.
So Margie was
Uh-oh.
applied to goods that are the country of origin of either Canada or the United States. So in the examples you were giving, if you've got something here in Canada or something, sorry, that was in the United States made in Japan and you want to bring it in from the United States to Canada, the tariffs would not apply to that. Those are Japanese goods. Canada's not having a trade dispute with Japan. So the quote unquote normal duty rates would apply. And quick tip, Canada has a free trade agreement with Japan. So had those goods come from Japan directly to Canada, you probably would have been able to land them without any duty. The United States does not have a free trade agreement with Japan. So just, tip.
Yes. Very good. So there are a few questions, and I know you did refer to this in your remarks, but I just want to make sure people understood properly. So the whole freight, transportation, delivery costs, all that, you can unbundle that from your overall, because some people have inclusive pricing. So you're suggesting unbundle that because you don't have to pay duties and tariffs on that, correct?
That's right.
And one person, I can't find their name right now, asked, what about the packaging costs as well?
Packaging costs are considered costs that are included with the product. So unfortunately, you have to pay duty on the packaging cost. The way that they look at it, were not for the packaging, you wouldn't be able to bring your goods to market. So the packaging costs are considered part of the product themselves, despite the fact it's not true. You rip the packaging off and throw it away, but it is considered, legally speaking, as part of the package. So unfortunately, it's dutiable.
Okay, so delivery is not dutiable, transportation, but anything to do with the product, which includes packaging, it's all part of the cost that you have to. Okay,
exactly.
So hopefully that clarifies. There were a few questions around that. Anything, Michelle, on your side that you're itching to ask? I have a couple more, but I didn't want to neglect you.
This one comes up a lot. This is coming from Julian. So if a good comes from Mexico but travels through the US, let's say Chicago, Atlanta, will a charge be applied of 25%?
So the answer to that is no, because there's something called a T&E, a transport and export bond. So has goods transit through the United States from Mexico on their direct way to Canada, as long as all the shipping documents clearly show the goods are moving from Mexico to Canada and they physically have to go through the United States just because that's the way North America is structured, you do not need to pay any sort of tariffs in the United States because the goods are never entering the commerce of the United States. Think of it like if you were flying to Europe from Canada and your plane stopped at LaGuardia Airport and they took on additional passengers, you don't clear through US Customs. You stay aboard the plane. You never really entered the United States, and then you continue your flight to Europe. It's the same idea.
Okay. So there was a couple here about products that may not be on a tariff list, or how to sort of I don't know if that makes sense to you. So people who may have a new product that may not be on the tariff list, how do they go about it? There's one particular from Julia saying, products we import from the US for our businesses are often mislabeled during customs. Our product currently is not on the tariff list. What is the best approach, aside from asking our supplier to clarify what the product is to customs agents, if customs places added duties on a product when they shouldn't be added? I don't know if you can answer that question or if you should want to refer her to somebody else who could, but.
So, I was a customs broker for a very long time before I started being a consultant. And what I can tell you is customs brokers are only as good as the information they get on the documentation, right? So if the documentation that you're getting from your suppliers isn't appropriately describing your goods, then I would have a conversation with your supplier, because you might be being charged tariffs that you shouldn't otherwise be paying. Accurate information is always the best information. But other than that, I really don't know what to say, because every good, so the book that I was talking about that's this thick, Technically, legally, everything under the stars has a number that finds in that book, even if it means other, meaning it doesn't specifically call it out in words that identify your goods specifically. Everything on earth, technically speaking, has a number in that book. The question is trying to appropriately match the number to your products.
Yeah, that's the challenge.
Yeah, that's the challenge. And that's where the help of service providers, for example, like your customs broker, and like that's what I do for a living, but your broker can also help you with that.
Right. So I'm just there's a question in the chat that I thought was good. So Jack is asking, if goods are manufactured in Canada with a large range of components from various jurisdictions such as Asia, Canada, and the USA, how are tariffs weighted?
I love that question. I love that question because it truly speaks to country of origin.
Yes.
So, I hate to answer it this way, but it all depends. In many, many, many cases, taking parts from all over the world and putting them through some sort of manufacturing process in Canada, legally speaking, there's a phrase called substantial transformation. Did you substantially transform the parts that you got from around the world in Canada? If you did, then there's a really, really good chance those rules that we were talking about from the free trade agreements, that framework where we were saying all the rules for all the different free trade agreements, the rules are kind of structured the same way. Those rules, you look up your tariff classification. Next to your tariff classification, there'll actually be a very specific rule for your products that will tell you if you've got all your parts, you need to know all the tariff classification of all your parts, and then you need to understand what the tariff classification of your finished good. And that rule will tell you if what you did in Canada is enough to qualify as, quote unquote, now a product of Canada.
Yeah. Rules of origin is one of the most complicated parts of trading. For over the years, I know it's one of the biggest stumbling blocks for small companies to deal with. So thank you for answering these questions. Do you have any advice, though, if they kind of need a little bit more guidance, their customs broker should be able to help them? Is there any other? Okay.
Customs brokers should be able to help them, yes. And that's something that, in my experience, I've dealt in the past with EDC. EDC had people who also could help in that particular circumstance. So for those of you who have dealt with EDC in the past, they do have like a range of consulting services. I'm not exactly sure exactly everything that's included in that, but I know that they have helped companies in the past understand the rules of origin.
And in fact, I just realized we didn't put that slide up, so we'll put that up after the Q&A and show you what the different groups are that you can go to. EDC is Export Development Canada, and that's part of what they can do, and we'll provide you with more information and links to those sources as well in just a moment. There is a few questions here about transfer pricing. I think you brought it up a little bit in one of the earlier slides. Rather than try, because you did even say, look, I can get into it in a different way. It's kind of more complicated. But Amy, because there's been a few questions on it, Amy has a question I think could help. Like, are there resources to give guidance on transfer pricing? Maybe we can go there. Do you have any advice on that?
So transfer pricing is an income tax concept. And what I can tell you is it's not a do-it-yourself kind of thing. It really isn't. There's expectations that CRA, so what it basically does, what transfer pricing basically does, is when you have a company, let's say in the United States and Canada, and they're related companies, you sell to each other using this transfer price. That transfer price then is what determines how much money the IRS makes on the sale and how much money CRA makes in the way of income taxes on the sale. So it's very fraught with it's got to be exact calculations. You have to be able to defend it, where you got your calculations from, what you're basing your decisions on. I mean, it's not a do-it-yourself type thing. It's definitely something that your accounting firm and some law firms, but when you're talking transfer price, it's an accounting math question, and you have to align yourself with Section 247 of the Canadian Income Tax Act. It's a tax thing.
Yeah, wish we had better news on that one.
Yeah, I know. I wish it was a do-it-yourself, but it's really not.
Yeah. I'm going to go to one that I think, again, we've had a couple of questions similar to it. Lynn is asking, if we ship goods to the US where we imported the raw materials from, which was from the US, is there any kind of credit to the US content?
Another great question. The answer to that is basically yes. Now, it depends. If you bring goods in from the United States and you further manufacture them or you process them in some way and you ship them back, what you're shipping back to the United States, the value of that is considered, I'll just use the words US goods returning, like welcome home goods. And the only thing that you have to pay tariffs on, generally speaking, are the value add that you added in Canada. Now, there's a few exceptions where that doesn't work and whatever. Again, your customs broker can help you with that kind of thing. But I'm going to say 8 out of 100 times, 8 out of 10 times, yes, you can get credit for that American stuff and you don't have to pay tariff on the American stuff that's returning.
Okay. Michelle, because I haven't been able to get through all of the questions, so you may have some further down the list that I haven't gotten to yet.
Yeah. Are there a number of assigned to every product that you're referring to, the harmonized system codes, so HRS code? So I think there's a lot of questions about those HS codes and where to access them.
Yeah, so HS codes, the Canadian tariff is available on CBSA's website. So the tariff, the nomenclature, which is called that big book, that's its official name, is the nomenclature, is readily available to Canadians free of charge as a website where you can go and take a look. Actually, appending the number to a product is kind of like what we were just talking about. In theory, I can explain it to you in an easy way. In reality, there's rules about how to do it. There are all kinds of notes that go with every chapter, and you're supposed to know the notes of the chapter and how it applies to your product. So it can get pretty complicated pretty quickly. People who have been trained to append tariff to products are people like myself, customs consultants. But again, I started my career in customs brokerage, and I've said it before today, your customs broker is really the one that can help you with that.
And I will say, if you are looking for another option to find your tariff too, the CARM portal, where a lot of you are probably doing those statement of accounts and all of your exporting documentation, within that CARM's account at CBSA portal, there is an option there to request a tariff ruling. So that is an option there. And there are several tools online as well where you could maybe start by getting a sense of what that tariff would look like and what the HS code. So there's one that was developed, I believe, by BDC, and I have shared the link in the chat. But it can just give you a bit of an idea of what the HS code looks like for a certain product and if a duty is applied to it. Yeah, but again, just as mentioned by Joy, we are recommending to get a second advice or second set of eyes on those HS codes by a customs broker.
And I just want to throw in there that to actually get a customs ruling from CBSA, their service standard is about a year long. So it's not like you put it in today and you'll have an answer back by tomorrow morning. Like, no, it doesn't work that way. It takes about a year to get it back. So that's why I'm saying in the interim, for day-to-day sort of thing, there are resources out there, including calling CBSA.
Great.
It's on the list.
Yeah. Hopefully these are a couple of quick questions. Lyle's asking, do tariffs apply to digital products?
So anything that is not physical, so digital products, like, so I'm going to give away my age here. If it's something's burned on a CD or if it's on a thumb drive or anything like that, that means it's physical. If it crosses an international border, then yes, it could attract tariffs. If it travels over the internet and it's quote unquote invisible, then no, it does not attract any sort of tariff. It has to be something physical that crosses the border.
Okay. And Emily is saying, are used products the same as goods returned for repair under same tariff code as the original ship products? So
goods being returned for repair, there is a program between Canada and the United States that deals with goods that are returning to another country for repair and overhaul. There's two tariff classifications that are used. The first one to describe the widget itself, whatever's being repaired, and a second one that speaks to that program. So it ends up being a 2-line entry. That's kind of a technical answer, but it's a 2-line entry. And again, your customs, any documentation that you're sending back with the goods should clearly state that the goods are going back for repair and overhaul, and then your broker will know how to prepare the entry.
Okay. Again, people are a little confused about when there's products coming from other countries and then going into the other country. So, for example, one person's asking, if you bring steel from Turkey to Canada and sell it to American customers, the tariff should not be applied. Is that correct? First of all, the tariffs are one way, but if we go the other way, yeah.
Well, unfortunately, since yesterday, steel from anywhere in the world entering the United States
That's
has
true.
tariffs on it. That's from
Yes.
anywhere in the world. Turkey, Canada, China, it doesn't matter. Anywhere in the world, steel going to the US attracts a tariff.
So similar to that, Emily's asking if you had goods shipped from Asia but were received from someone in the States who then shipped it to Canada, would it be considered it would be considered dutiable, is that she's asking.
So Asian goods that went first to the United States and then came to Canada. If Canada puts retaliatory tariffs against the United States, there would be no tariffs on those goods because we don't have a trade war with Asia. We have a trade war with the United States so that our tariffs only apply to goods, quote unquote, made in the US. I say that very loosely. It's goods of origin of the United States.
Okay. Michelle, any more from you?
We pay Canadian duties when imported and then the product is sold in the US. Can the duty paid in the US be claimed?
Duty, if you brought it into Canada the first time and you paid duty, and then you subsequently sold it and shipped it to the US, you can't get back your US duty, but you can get back your Canadian duty. You can do a drawback, an export drawback.
Yeah, we're getting into some very detailed pieces here. So people are asking, like, how about books? Paper is made in the US, paper is imported into Canada, printer prints the page, it covers them and sends everything to the US to be bound.
I'd actually like to answer that one because what you just described, that's substantial transformation. So what came into Canada was paper, what left Canada was a book. It's not the same thing. It's not the same thing, right? So it's substantial transformation. The paper lost its US identity and it became a Canadian book.
So therefore, going into the US,
it would attract a tariff. Assuming that the March 4th tariffs that apply on absolutely everything Canadian do come to pass, which touch wood doesn't happen. But today, as we speak, there would be no tariffs on that book crossing. March 4th, there could be a tariff on that book crossing.
Okay. Michelle, anything on your end?
Sorry, just
yeah. Pedro's just a quick question. Are the HS codes the same for US customs and for Canadian customs?
So HS codes in the United States and Canada are both 10 digits long. The first 6 digits are the same. The last 4 digits are different because the countries use the data slightly differently. That's for statistical purposes, those last 4. So the first 6 should be the same. Your last 4, if you look at the tariff and compare the Canadian tariff to the US tariff, you'll see the last 4 digits won't match, but that's okay. You choose the digits for whatever country the goods are going into.
Okay.
One question we've got a lot also before was about how can the US apply tariffs when we have CUSMA agreement in place?
Yeah.
So that's a question a lot of people want to know the answer to. And the answer to that is basically there is a clause in our free trade agreement that states that there's nothing in the free trade agreement that stops a country from taking action it deems it needs to take in the event of national security. So the Trump administration has issued executive orders declaring national emergencies on both the the US-Mexico border and the US-Canadian border. The national emergency that's been declared at this moment in history is fentanyl and illegal immigrants. So that's the national emergency. Because there's a national emergency, then the free trade agreement allows a country to take whatever action it deems necessary. The Trump administration has deemed it necessary to potentially apply 25% tariffs.
Yeah. So we're getting close to time, but I wanted to ask couple more questions on this, and then I do want to answer a couple of questions that were sort of non-tariff related, more about Buy Canadian. But for you, Joy, if the tariffs come into effect, how will the application look? Will we be able to pay the tariff through our broker, or will we have to register through another application to pay tariffs?
In Canada, it's going to be the same. Now that we have CARM, the expectation is that you pay the government directly. You don't pay your customs broker anymore. So in the same way that you're handling quote unquote normal shipments today, the tariff would just mean you owe more money ultimately at the end if there were retaliatory tariffs, but it's paid the same way directly to the Canadian government. In the United States, you can still pay a customs broker and the broker pays the government.
Okay. The other one, oh, sorry, go ahead,
I
Michelle.
will add to that CBSA has confirmed that if eventually retaliatory measures do come in place, that their systems are ready for this as well. So
Yeah,
there would be
ours
no
will be ready.
process change for
That's
business.
right. That's right.
I do want to touch on Dan's question, though. He's asking, can you explain the de minimis changes? Because that's something we haven't touched on yet. And if de minimis entries are applied by, I don't know what COO means. I don't know if that means.
Country of origin.
Okay.
Country of origin.
Thank you.
So de minimis in the United States is any package that's worth $800 US or less traditionally can enter into the United States completely free of any duty, no customs brokerage fee, nothing, completely free, as though it was mailed, if you want to think of it that way. In Canada, we have a different de minimis, which I'll go through in a second. But in what they're looking at doing in the United States is doing away with the de minimis. And as it stands right now, goods from China are not eligible to enter the United States using that program. All goods from China, no matter where they're being shipped from, if the origin is China, they can't use that program. They have to have a full entry done on them, and duties and taxes have to be paid on them regardless of the value of what's in the box, even if it's under $800. So that's a big change in the United States. The Canadian de minimis, there's no talk about changing the Canadian de minimis right now. The Canadian de minimis, $40 and under, it's completely free. $40 to $150, it's duty free, but you have to pay GST. $150 and up, you pay duty and GST.
Yeah, and the Canadian de minimis is much lower than the American one, but it is under threat for Canada as well as part of the as part of the tariffs that could come into effect in March.
Yeah.
Okay, quickly, I just wanted to answer Tiffany's question from way early on in about how to make sure our business is showing on a Buy Canada list. Well, I just wanted to assure you what we're going to be doing is we're going to have posters and opportunities for companies who wanted to show that they're Canadian or that they're a local small business or something to sort of help make it easier for consumers to identify you. So Tiffany will get you more information about that once we're a bit more settled on how that's all going to work. The other thing I wanted to mention is I know one of the other questions that came in was around, and it was a good reminder, so I just want to acknowledge it, about somebody who's in the tourism industry and relies on American tourism and is worried that the sort of backlash may result in less tourism also coming into Canada, and to make sure that the messaging is clear that this is still an important component. And so we hear you on that. I wanted to acknowledge that it was a good intervention and for something for us to kind of keep in mind as we do public statements around what Canadians can do. But I think it is a good reminder. I also wanted to touch on Darius's quick comment. Darius said, with the media influence on consumers, I suspect consumers are less confident in spending and maybe more conservative because they're scared with the current economic situation. So increasing advertising to buy local is helpful, but consumers are concerned about the economy and overall spending is expected to be reduced, and wanted to know our thoughts. And I think you're spot on, Darius. I think there is going to be some challenges ahead for us if this does happen again. President Trump is incredibly unpredictable. It's unclear if he will continue to go through or will delay again. It's really, we don't know. But absolutely, the instability can also cause individuals to sort of be worried about their jobs, may be pulling back a little bit. So I'm not going to lie, this could potentially be a bumpy road for a little while. So hopefully some of the ideas Joy's sort of suggested as how you can potentially prepare yourself a little bit will be helpful. We just don't know what the future is going to look like with this president right now. So I just wanted to acknowledge that as well. And thank you for your questions. With that, I just want to quickly go back to the slide deck if possible. Thank you. I wanted to make sure, so everybody, so you know, we're always available at CFIB to help answer your questions. But Joy has also said that if you need to contact her, her and her firm do provide lots of information and help. So you're more than welcome to contact her. Her information is there and her email address if you want to follow up directly with her. But always feel free to make sure to call us as well. We can certainly help you as much as we can. Webinars, yep, next slide is good. Webinars are coming up. We will be doing another webinar at the end of February. We're going to bring our president, Dan Kelly, into the mix on this one, breaking down the headlines, a little bit of what's happening with the Canadian political situation, what's happening with the US political situation. It'll be a conversation between Dan and I. So please join us for that. I suspect we'll be giving updates on where we're at that point on this as well. And then finally, I want to, just as we're about to, go to the last slide is good. I want to make sure if you enjoyed this, we'd love to have you share it with others. So please refer a member to CFIB and help them also with this information. We'd be happy to have more people join the force here at CFIB. And finally, I think the last slide, this is the number you can call us at just as a reminder. And as we go, I know we're a minute or two over. Joy, do you have any last minute words of wisdom that you'd like to share with the people that are still with us?
I guess I'd just like to say, just keep in mind that accounting firms and law firms cannot charge you until you have a signed contract with them. So lean on your service providers, call them. It's amazing the amount of information you can get without having to pay for something. So we welcome those calls. Don't be shy.
Great. And Michelle, any last words from you?
Yeah, I mean, thank you so much, everyone, for joining us and for sharing some of your feedback. Don't be scared to reach out to business resources if you're looking for specific, items on this. We've got that great webpage with updates, and we're trying to stay on top of all of Trump's newest announcements. But we'll do our best to continue communicating those through the website.
Yeah, and questions that you're providing us today will help build our own Q&A on our website. So continue to go there. If you're having problems, give us a call and use resources around you. And finally, I want to thank you. We're here. We're trying to do as much as we can to help. We're always happy to do everything we can. It is unfortunately going to be a bit of a tough period, but I think that you guys are resilient, and we're really happy to have you join us here today. So thanks. With that, we'll end the webinar.